What's going on, everybody? TG here, back with another video. Thought we should talk about the wild roller coaster that today in the market had in store for it after the Fed moved its timeline for rate hikes to 2023 as inflation continues to rise. Jay Powell talked about how he expects inflation to be 3.4%, which is a full percentage higher than the March projection, and is talking about that he still remains on his statement that inflation pressure is transitory, which is somewhat good for the market. But at first, the market did take a massive hit, dropping, NASDAQ about 1.2%. The S&P dropped as well right after he said that to about 0.74%. Not as big as we thought, but overall, it still looks pretty good for the market, I'd say. I mean, obviously, inflation is an issue, but the fact that they're not hiking rates up till 2023, that's really good. That gives us over a year and a half of low interest rates, and the market is doing pretty good with that. We saw Apple really take a big reversal. Apple was down big at one point today and then just roared back about 1.3%. Apple is still trading very cheap, in my opinion, under a 30 PE ratio. I think that's a great bargain. That's why we own a lot of Apple myself. But also, guys, if you could like and subscribe, that would mean a ton to me, absolutely a ton to me. Also, Discord link in the description below if you want to join and chat with us about different stuff. That'd be awesome as well. But yeah, there's a lot going on in this market. A lot of uncertainty, as you saw with the VIX spiking up today. At one point was up massive, over 19, fell 12% since then. I really wish I was actively trading the VIX. I was trading UVXY, and I did get hammered on that. Just timing was really bad, so that did not work out good for me. But overall, trading the VIX can be very profitable if you time it correctly. I mean, we literally watched it go from mid 16s up to literally 19. It's over a 17% increase, but overall, I still think this is a great play. I really do. And I think there's a lot of money to be made playing the whole volatility spikes. But, what this means for growth stocks is kind of remains unchanged. I think that growth is still a viable sector, depending on what type of growth. If you're talking growth like senior growth, like Apple, Amazon, Facebook, all those, or if you're talking junior growth, with high valuations like Tesla and Roku and some of those other ones. Some of the think of the ARK stocks as those ones. Those could be a little more risky in my opinion, just because their PE ratios are so high. I can see them getting sold off hard. Although Teladoc really did recover massive from where it was. But this is a time where you can be in this market and you can be in the cyclicals and the industrials like Caterpillar. I think Caterpillar is a great stock right now, and it is down about 1%. If I want to see this near 200, and I will definitely buy. I don't know if it's going to go there. That's good. The financials were actually extremely strong today and held up. They were down at one point and they really recovered big. From that bottom up to the top, that's about 2.2%. Really wish I could have got in on that because I think Goldman is a great stock. All the banks are really, but if interest rates are going to stay low, like we think they are, and like Jay Powell said, you can see a lot of stocks do really well. Stocks like Apple, because Apple is one of those companies that it kind of has its foot in both doors. It's a consumer business, but it's also a tech business. And, they're able to perform very well because of that. And I think that you're going to continue to see, Apple slowly climb back into the 140s. We're not going to have, insane growth like we had, back in last June where, it really spiked up like over 50%. But I can see, Apple making some strides, trying to test all-time highs again at 145 because stock is still down 10% from highs. And I bet you can definitely see a rally slowly. Back to where it belongs because, fundamentally speaking, it's still extremely solid, and I think it's still a massive buy. I really do. You see quarters like this, revenue growth like this, I think it definitely signals a buy, and I wouldn't be surprised if we test all-time highs by the end of the year. I really wouldn't be surprised about that. But anyways, that's really about it when it comes to the inflation trade. But I think one of the important things to remember going forward is short-term versus long-term stance. Because playing short term, you can get hit hard. Even days like this, like if you're on the short term side of calls and stuff, like this is not the day for it. You will get hammered. Especially you're in QQQ or any of that stuff like that. If those big drop offs, those calls get hammered, they get IV crushed. You got to be careful playing short term on this. Those who had puts on this drop and made a fortune, calls on the way up made a fortune. But it's really hard to play that. So I recommend a little bit of a more long dated approach. That's what I'm trying to do. There's obviously a couple positions that I do keep short term. A couple credit spreads on like BABA and stuff. Unfortunately, BABA had another terrible day in the market. Thing just continues to get sold off. It's very, very annoying. But I do see the recovery very soon. And worst case scenario, you roll the options the next week, take a small loss, and then wait for the right moment. But I do think this will still turn out good. I think that it's too cheap now to ignore at a 24 PE ratio with that much growth. I think it's just too cheap to ignore. So again, we'll see how all of it is, and we'll see how everything works. But essentially, I think this is going to be a great play. I think that owning quality is really going to help you. Stick with stuff that has good earnings. Is not traded on future sales but future earnings, because those high flying growth stocks can get slaughtered with inflation going up. So just think about that. Think about all the variables that go into that, and I'm trying to play it smart, with that, and continue to average down as these sell-offs happen, because they do become really cheap. I mean, you look at something like BABA down 6.66. Ooh, that's a bad sign. 6.6% over the past year, not just year to date, down year. So despite growing so much, I think it's a perfect play. It's consolidated and really been heavily oversold. So that's the play I'm in. But with interest rates not increasing until 2023, I still think growth is the best move. But eventually, I am going to get into more of the cyclical stocks, probably in about a year. If if tech does have a really good rally, towards the end of January, I'm definitely going to switch out my positions to a more a Dow type stocks, value stocks over growth stocks. But right now, I think for the next 6, 7, 8 months, I think growth is the play. I think that's the best place to put your money. They're heavily beaten down, while cyclicals and industrials are near all-time highs. And you see that with the with the Dow Jones. So Dow Jones is not much off highs, only like 2%. With the Nasdaq itself is off a little bit more than that. Especially big tech names like Apple, like we discussed, and Amazon. Those are 10% off highs almost. So again, we'll have to see how everything plays out and how everything goes. But I think this is the best trade right now to do, and I can expect some sort of rally coming in towards summer. I think that'll be a good idea of what the market is going to look like for the short term. But anyways, guys, I hope you guys are having a great day. Very stressful what's going on here, but overall, trying to stay optimistic, and I think that the news is out, and I think we can start to see a bit of a rally now. Again, these companies have been beaten down pretty hard. The ones that I'm in, and I could see a big recovery coming. I don't think it's gonna be fast or anything like that, but I think we're gonna see a slow and steady recovery. As we go in towards the summer and then the fall. So, anyways, guys, have a wonderful day. Remember to like, subscribe. It means a ton to me. But I'll see you guys in the next video. Love to chat with you guys. Come to the Discord. I'm always in there talking to people. And if you guys ever need to talk, I'm always here for you. So have a wonderful day. Like and subscribe. And let me know what plays you guys are going to be making these next couple of weeks. I'm just going to be sticking with my growth stocks, BABA, Amazon, Apple, AMD, stuff like that. And wait to see if the industrials do get sold off, a little extra hard, and then we'll go ahead and jump into that. But right now, obviously, our biggest concern right now and biggest play is BABA. So we're going to continue to watch that. But anyways, guys, have a wonderful, wonderful day. I will see you guys in the next video. Take it easy, guys. Bye-bye.